If you're making over six figures, you're probably giving away more money to the IRS than you need to. And I'm about to show you how to legally keep more of it in your pocket. By the end of this video, you'll know exactly how to keep more of your hard-earned money without breaking any laws. These are completely legal, ethical strategies written right into the tax code for you to use. High earners often overpay taxes due to lack of planning. The average American earning over $200K could save $10,000 plus a year with the right strategies. Most people are busy running their businesses and living their lives. They don't have time to become tax experts, so they delegate it to an accountant, sign the forms, and hope for the best. That's a dangerous assumption. You see that huge chunk of money taken out of every paycheck and feel powerless. For high-income earners, this isn't a few $100s. It could easily be a 5- or 6-figure mistake every single year. That's a luxury car, a down payment on a rental property, or your child's education fund, gone. The single most powerful tax-saving tool available to almost everyone is the retirement account. If you're in the 35% tax bracket, a $20,000 contribution to your 401k instantly saves you $7,000 in taxes. You should treat the contribution limits as a target, not a suggestion. The maximum employee contribution is projected to be around $23,500. If you're self-employed, a SEP IRA allows you to contribute up to 25% of your compensation, with a maximum that can exceed $60,000 a year. This strategy does two incredible things at once. It drastically reduces your current taxable income and builds wealth that grows tax-deferred for decades. There is no investment in the stock market that can offer you a guaranteed 35% return in one day, but a tax deduction does exactly that. Make a plan today. Calculate the maximum you can contribute and set up automatic transfers. Starve the taxman and feed your future self. Real estate is a cornerstone of wealth for a reason. It's not just about collecting rent checks, it's a powerful tax-saving machine. The magic word here is depreciation. It's a non-cash deduction, a phantom expense that the IRS allows you to claim. You can depreciate a $400,000 building over 27.5 years. That's about $14,545 every single year. For high-income earners, becoming a real estate professional in the eyes of the IRS opens up a whole new world. You must spend more than half your professional time and more than 750 hours a year in real property trades or businesses. You can then deduct your real estate losses, including those massive depreciation losses, against your active income like your salary. This can lead to gigantic tax savings. Charity is a noble pursuit. It's about giving back and supporting causes you believe in, but there's no rule that says you can't be smart about it. Instead of donating $10,000 a year, bundle 3 years into $30,000 in 1 year. You'll easily surpass the standard deduction and get a huge tax break. A donor-advised fund is like a personal charitable savings account. You get the full tax deduction immediately, but can distribute to charities over time. The ultimate move is donating appreciated stock, not cash. If stock worth $100,000 cost you $20,000, you avoid capital gains tax on $80,000. You get to deduct the full market value and pay zero capital gains tax. This is the most tax-efficient way to give. Many people think of the HSA as just another way to pay for doctor visits. That's a massive understatement. The HSA is the most powerful tax-advantaged account that exists, even better than a 401k or Roth IRA. It offers a triple tax benefit. For 2025, you can contribute around $4,300 for an individual and $8,550 for a family. The secret is using it as a long-term investment vehicle. Pay current medical expenses out of pocket and let the HSA money grow. With modest returns over 20 years, you could accumulate several $100,000 to cover healthcare costs in retirement tax-free. After 65, you can withdraw for any reason. Worst case, it acted like a traditional retirement account, but the upside is immense. This one is for the consultants, freelancers, and small business owners. If you operate as a sole proprietor, you're getting hammered by self-employment taxes. This is a double whammy tax of 15.3% on your net earnings. It's brutal and can take a huge bite out of your profits. But there is a way to legally reduce this burden, forming an S-corporation. As an S-corp owner, you pay yourself a reasonable salary subject to payroll taxes, but profits above that salary can be distributed without self-employment tax. On $200,000 in profit, with an $80,000 salary, you save over $18,000 in taxes. That's real money you can reinvest. The key is the reasonable salary. You should consult with a good accountant to determine what's reasonable for your situation. For most high earners, the tax savings far outweigh the costs. These aren't just isolated tips, they are the building blocks of a financial fortress. Each strategy is a stone in a wall designed to protect your wealth. Imagine a consultant making $300,000. They form an S-corp, max out retirement accounts, use HSA, own rental property, and bundle charity. This is smart financial planning. This is how the wealthy play the game. They use the rulebook to legally keep as much as possible, putting it to work to generate even more wealth. The first step is to stop being a passive participant in your financial life. You need to take control, review your situation. Are you maxing out retirement accounts? Using your HSA fully? Operating efficiently as a business owner? Build your fortress stone by stone. The journey to financial freedom is built one smart decision at a time. I've laid out the blueprint. These are practical strategies that the wealthy use every single day. The tax code is a game and it's time to go on offense. Saving $20,000 in taxes this year is great, but investing that and letting it grow for 2 decades is life-changing. That's how fortunes are built. Which one of these hacks surprised you the most? Was it real estate depreciation, the HSA triple benefit, or the S-corp strategy? Share your best tip or the strategy you plan to implement in the comments below. What's your $1 million move for keeping more of what you earn? If this helped you save money, hit the like button so more people can see it. And subscribe. Next week I'm covering how to legally turn your vacation into a tax deduction. Let's learn from each other and make 2025 the year we all stop burning our money and start building our empires.